give it a go. All right. Hey, good morning. Could y'all just let me know if you hear me this morning? I just need to do a microphone check real quick. I reset some things on the back end, so I just want to make sure everything's going through. Okay, good. Thank you. I'm using the backup ingest server, I guess is what they call it, for YouTube, because I've been having a lot of problems with my stream. So I decided to try some stuff out, but I had to reset my thing, and I just wanted to make sure everything was still working. Couldn't test it. All right. Hopefully this is a good lock for a couple hours here. We can get some stuff done. So I've got on the screen GameStop right now. I haven't really done any charting on it since last week. I was just kind of scrolling through and seeing what it was looking like, because AMC looks so-so. It's not like horrible. You might think it's really bad, but really this is not, I mean, it's kind of not anything right now. I mean, if you look at where it is compared to where it was last week, it could definitely be a hook, which is common. To me, it looks a bit like an auto reaction here. And so we'll see what happens. Like, it had a pretty sizable drop on considerable volume. And then you get like an auto reaction from that drop. And then that's sort of like the first step amongst many. It did come maybe a bit too high for my liking. It came back into the previous range. I'm not a huge fan of that, because it's typically more distributive, but again, that's not a nail in the coffin, so to speak. My biggest concern on AMC is this wraparound right now. So kind of some pros and cons to it, I suppose. I have a lot of thoughts about it that we could go into, but right now I just kind of want to point out that there's a middle point on the 16th. So that's what I'm watching right now. This is a pretty classic S-curve setup. And if this continues the way that it's currently moving, without going into, again, super crazy detail here, you're looking at this area right here as the middle, which is, let's see, 318. It looks like it opened, it's kind of tricky. We may have to go smaller. It looks like it opened at 318 and the high was also 318, but there's a wick on it, so that's kind of weird. So right now, that's sort of the offset middle, 318 on July 16th, which was a Monday. And that's based on a wraparound here that's really solid. So there was a very clear, I mean, it's almost a perfect mirror, and you don't get that too often where it's essentially like perfect, but that's what this is. So you got a essentially like a perfect wrap right here. And so what I did is I measured between the two and then looked at, and I know this was a while ago, this was like over a week ago now, but like I looked at that and checked out the timing on it, and where that middle was is on the drop ledge, which makes sense. That wasn't really anything profound. We kind of had surmised as much previously. We had talked about these middles frequently, but I wanted to just double check it and see. So I really want to get this structure finished. And I didn't do a lot on that structure. I've been using like the broader picture. And so I want to get that structure finished. So what I'm looking for is approximately where that is in terms of the ledges. And then I was flipping over to GME to see if it did anything unusual, and it hasn't. It's essentially done what I thought it was going to do, which was a little bounce here and then a drop. And if I recall, I said as long as this doesn't go lower, I'm just looking at my chart here, I think this is actually quite good. I think I said on Thursday or last time I streamed, it may have been Wednesday even, that I thought this might pop up and have a head fake and then come back down, and that actually be better than just going straight up because it hasn't come back to test these lows. And by doing so, you're giving yourself that retest earlier instead of kind of avoiding it, which is typically not good. So this is what we're talking about right here, coming back down. And I'm going to just kind of doodle where I think it is approximately, maybe right there. So it looks like that's the cross up right here. These are just extensions. So I don't actually see this as much of a bad thing. I think this is potentially very good. The challenge, of course, in that argument is always like, well, if it drops below this low over here at 2246, isn't that a sign of weakness? I don't think so. I think that if it can stay above really this like 2230 area right here, I think you're in good shape. Even if it dips low, because in theory, this could be like an auto reaction and a phase B top, in which case this has still got a long ways to go. I've kind of just got it going straight up. There's reasons for that, because if this is an M cross to the upside, that to me is a potentially big bullish breakout zone. And honestly, like I said, I think you could go all the way down to like 2211 and be okay. The sign of weakness is below there, in my opinion. So this harkens back to some maybe questionable early TA that I did on what I call the master fractal. No, I didn't see that. That's a good piece of information, though. And I actually kind of want to bust that out. It's been a minute, so let's do that. So the reason that this could be very bullish is because the way that this M cross broke to the upside here shows quite a bit of strength. I'm not in love with the volume, and the idea that there's a rising wedge makes you think, well, it could come all the way back down to the floor. Sure it could. I mean, there's no one size fits all here that says it has to do this or has to do that. But in this kind of master fractal build out that I like to use every now and then, what this represents is a waveform pattern that's ultimately like bullish. Okay, now this doesn't include volume, which is problematic because we can't see the volume on it. So that is an issue. I mean, you don't want to have like a bias towards bull side if you're not able to see the volume. That could be a big issue. But I think that the basic principles here are essentially identical in terms of this build out, which is that you're accumulating up a range. If you build that low in the appropriate spot on the final dip here, you should be in a good place, in my opinion, to advance. My biggest kind of concern is this right here, because it went high and then it made a new low. So it actually broke down and it went up again. So this is probably my biggest like, uh-oh thing, you know, if I have to pick one. And this is where it dropped again, as you can see. So this creates a sign of weakness, is what it's called, because it pushed up, it advanced, and it changed direction. And it goes up one more time, right, in this kind of like last hurrah moment. And it makes you think it's going to go, right? That's always like the kind of the bullish nature of it. It looks bullish. It's a trap. This is a problem because, again, it breached high, it hit a high, went above the top, and it did it twice. And it actually has two signs of weakness, one right here, one right here. So there's like a widening that's going on. And this is part of the reason why I thought when we talked about it previously, it would probably come back down, because it seemed like it was getting ready to drop, and it had the really clear and evident SOWs up here coming down. Well, now we're like below them. So anyways, so you get this weakness on the top right here because it's dipping low, pushing up, dipping low, pushing up. And then ultimately what this then becomes is just a normal cat ear. And that's why I thought it was pretty likely last week when I was looking at it, pretty likely it goes up and then drops. And it'd probably be for the best, because if it goes up again, that's what I was saying, is if it goes up again, it's avoiding this really obvious sign of weakness, which is bad. Anytime that the market has clear and evident signs of down and then it doesn't go down, you should always be a bit cautious about the overall picture, because that means there's something off, right? And usually there's a bull trap involved at the end. So, and it's pretty nasty. So I was happy to see that this actually did go ahead and drop, believe it or not. I think it's better for the stock long term. Had it gone up first, I think you've been very likely going to be coming down really, really, really rapidly in the near future. So anyways, so we look at this, we can take a look at why I would use this comparison. There are obviously some differences. So like number one is when this breached the top finally, it does have that push up and it drops down, but there's no sign of weakness. So this is more along the lines of a SOS. So do you see how there's a consolidation at the top here? That's consolidating along the previous high. And in our case, looking back, that would have been around 24 up here, maybe a little less, 23.90. So this has that push up, but every one of the lows is actually higher low until it breaks down. And then it goes into the distribution just like you would expect. And it does distribute off that middle here, just like it did here. So one of these is distinctly more distributive than the other, and it's this GME setup currently, right? Just by this comparison. What's interesting to note is that when this came back down, and at this point, I can't undo all these scribbles. I've saved this so many times and unfortunately saved over my stuff so many times. But but what ultimately happens, this is just a wave cross. This is just an S-curve. It's a wave up, up, down. And I've talked about the M shapes, the double M. So one big giant M and then an M on the one, M on the other. It's essentially identical, right? If you look at this side and you look at this side, you really have like the same thing, almost to the T, like almost to the letter, right? It's like very, very precise. You still have this widening here at the top with some signs of weakness, and then there's a drop, right? Same thing. So when we look at this on the big picture, though, we can take into consideration all that information and say, yeah, there's some weakness there, but ultimately, we're really most concerned about where is that creek and is it broken down yet? And there's probably a couple different ways to illustrate this. This is like an earlier marker. I'm going to make this a little lighter right now. It's important, but I'm going to leave it on the chart, but I'm going to make it a little bit less contrasting. And then I would take a look at this and suggest to you that these are probably in line for a reason. This really echoes the other SOWs that we were making. So this is just another one. And I don't see any others that are really particularly good. The only other one I could think of is maybe where this took off right here. That's about the only one. But that could actually be very much this guy. Yeah. And I don't think that matters as much. I think what is more important here is probably going to be this particular zone right here, right around 2310, which it's weird thinking back because I don't know if you guys remember, but 2310 was one of my mid levels. So when we talked about GME on the whole, I haven't forgotten it. We talked about GME on the whole. We talked about there was this region from about 22 up to 26 that historically has been really, really, really important for GameStop. And we were doing it in light of what happened for about it was like 16, 18 months or something ridiculous. January 2022 to July 2023. Give or take some time on either end if you want to include some of the downside or whatever. But this area from January 2022 to July 2023, it sits around this bracketed sort of $24 to $26. And when we were first coming down, I marked off 23.10 as kind of like the lower end. I say most important level, but there certainly are very many of them. But I used 23.10 quite a bit. And I thought that was probably one of the most important levels. So it's kind of interesting that it's back in play again. Well, maybe not that interesting. If you get it right, it should come back around, right? It's a historic level here. A lot of it had to do, if I recall, with this drop here, and that being very significant and pivotal. This is where you had a huge distribution effort in the past. And ultimately, when we look at this, there's really only two main points that are of high interest. One would be this top and one would be this drop ledge in terms of selling, right? Because you would have supports in the same way here, right? Where's the breakout? Where is the bottom? That kind of thing, and you'd have those markers as well. So we kind of pulled this area from about, again, 20, it was really more like 26 down to like 22, if I recall, because I don't think I went up as high as 28, but it does kind of look like maybe you could. I had only gone up to like 26 here. I thought that was more important. So this zone is very, very, very important. And Cohen had only done his offerings at above the 24 level. So we noted that when we looked back, it was almost always at the same spot. Every earnings came back to this same zone pretty religiously. For that 18-month period, it was always almost always in this spot, which is very odd. So earnings, this essentially looked flat if you look at just the earnings reports. And then here, anytime we came above that, we saw dilution, and we were seeing it again and again and again. I mean, every single one of these, 1, 2, 3, 4, 5, I think, or 4 at least. 1, 2, 3, 4. I don't think there was 5. But that's a lot, right? And it's all in the same area. And if you look at it, anytime this hit 28, we were kind of at risk of an offering. But it was really, again, coming above this support level. So now we're below it. I mean, we're in the same situation we were here, where you've got some problems, right? This is where you could end up with a hook. So that's big picture. And come back to where we were. So if I look at that, I'm like, yeah, this all makes sense then. Why this might be an SOW, and why we would need to maybe find some support right here. This 22 area is super important for buying. And if you don't buy here, if you're selling from this level down, especially below this 22, this is a big sell zone potentially, right? So if it's not acting as, that's all there is to it, right? If it's not acting as a buy zone and it flips, then you're in trouble. So this is certainly a potential breakdown zone. Big picture, and absolutely small picture, it's set up that way too, including that rising ice level, the widest ice that we could draw here. It's already kind of sitting right above it. So when I look at this, I'm going to get rid of this blue now. It's not particularly surprising to me then that we are doing what we're doing in terms of trading across here. We're trying to decide whether or not this is bullish. And I think it could be, but again, we've got some issues, right, with this top. We just kind of illustrated it a few minutes ago. So is this the same? No. And I think that one thing that I would note is that this was a particular setup from 2021. This was December of 2021. Yeah, going into 2022, that's right. And then I think this was around the 13th or something to the 17th. I use this as a model because I started just deciding like this was a really good way to understand a bottom. And there was one piece though that I didn't get at the time, which was this drop early on. And this was an SOW early on. So there was a clear indication this was going to go down later, and it did. By December 30th, the AMC had dropped back down, and it went back down to these levels before January. And so it has this big like 30 to 40% move after this particular setup right here. But ultimately, it was a distributive move, and it came back down. We see this time and time again on AMC. It's nothing particularly profound in that anymore, but there was a lot of cool stuff that you can get from this. Like one thing was that the wave up here doesn't look like it's going to continue, right? But when it does continue, like meaning like it has the appearance of continuation. And I think that I called it right at the time that it was going to break out and go. But the wave up here actually set up like a cat ear. So this peak that looks like it's in this Mark 7 from the bottom does point. If you take from the bottom to that peak, it does point to the eventual top. Now that doesn't mean that this is, again, necessarily going to do the exact same thing, but that would be a potential target, and that would be something that you could use as, I think, a very valid argument that, like, sure, like that could be going up to this top at some point in the future if this is a slingshot, right? The distribution on this angle right here is obviously different. It did have like a higher secondary top. I think it's problematic in the way that it was building on this top. Then again, what is the ultimate stopping point? It's really like where do these weaknesses eventually take you on the walk down? This builds out as kind of a falling wedge slash bull flag, and then it breaks out. And again, that's the right side of a wave. So you're coming up and then back down again. So you're on the right side. And it is also like a head and shoulder. We've talked about that. There's like a widening and then a narrowing, yada, yada, yada. There's all kinds of fun stuff you can do with this. So on the big picture, though, I would suggest that that's a non-negotiable. This idea that it has to hold, I think that's a non-negotiable. So you have to look at this and say, all right, it's already below this marker. That's one thing. But you can't expect it to drop significantly lower than the actual wave cross if you want it to have continuation. And that's just a matter of, I mean, to some degree, just a matter of fact. You know, like there cannot be and I don't know why I did it like that. That was bonkers. That was a weird way to draw it out. You cannot have a drop below the creek that was formed here. So that continuation needs to basically steady itself at or above that demand zone. And if it doesn't, then I think you're in bigger trouble, right? So we could do other things. I don't really care to do every single thing. You could do a retracement. That's the 618 retracement. That seems right. Again, it's in the right pocket. By Volkowski standards, if you measure from the breakdown, that would be as low as it could go. And that is actually low, like real low. So that does come all the way down to that potential SOW area. I think that's problematic long term, but that's where that 60% goes. It goes right below it. So that's if you measure from the breakdown, the 60% of the total from the breakdown, as opposed to just a 618 retracement. You see the difference? So the 618 retracement, just bottom to top, and that's healthy. That's in the right spot. It's right where you would kind of expect it to be. You're probably looking at this saying, well, yeah, but there is a gap, down here to like 2214. Exactly. And that's what I'm trying to say is like, it's got this, and it's also the 786. It's got this kind of already built-in wall because of that gap. And it's measured perfectly away from that gap now at 786 extension, basically. I mean, it's kind of crazy how that works out, right? And then again, the Bulkowski breakdown takes you lower than that. So if it took a longer time to get there, even by a couple days, let's say Wednesday, could it get all the way down here Wednesday and still be okay? Yeah, it could. You know, you could stay above 22.11, hit the gap. You don't have to go lower. The idea that it could go lower is really my concern, and that's where I've kind of left it right now. In terms of this waveform pattern, ups and downs and all that jazz, again, we can use this as a kind of a guide. I've done a lot of work on this. I know like all the little ins and outs of it. Like I've done a ton. I spent about a year with this, which sounds crazy, but I learned a huge amount of information about market moves and especially sine wave pattern from it. And I would just say this is like the bigger picture tends to be better anyways. And so again, the bigger picture here being like, where is that kind of initial support, and did we already drop it? We did drop it here. I think this is the kind of the best place it could have found support, right around 23.10. It's below it right now. So that's already happened. And that was where we jumped off on the wave cross, on the M cross down low. So again, this already had built in where that, you can see it. It had already built in, there's actually a little weakness there too, but it already built in where that was, that creek cross. And it's already kind of dipped below that at this point. That could change. It could come back above all of a sudden and be going. But for now, like that's already dropped. So like that's that. The ship has sailed. We don't have to ask that question anymore. Going forward, I think again, the big picture reigns here. So we want to make sure that we're just kind of paying attention to some basic fundamental stuff. One of the things is like, how do you measure the full distance here? It is debatable, I guess. And what I mean by that is like, I've never really decided is what I mean. When I say it's debatable, I'm not sitting there debating other people about it. I just haven't really made up my mind because I've found that it could be a length of time. But there's typically only a couple spots that I would pick out, and these are the two spots. So one would be on the middle break where it did cross the major creek. If that's the case, it's due for being done now. Like you can see, it's essentially done today. That's the measurement, all right? I'm not fudging it to make it look like it's done today. That is the measurement. So that would be like the full M cross 1, 2. If that's the middle, then it's finished here today. It's possible. I mean, yeah, you have it on the chart book, see that it goes down and right back up today. But I didn't measure that. I just kind of looked at it and said, yeah, that seems about right. Now I'm measuring it, and I think that that's correct. Maybe I measured it. I don't know. The second spot is a little trickier. It's usually when it breaks out of the breakout. Now, that sounds a little odd, but if you think about this as like a bottom, it kind of makes sense that you might not measure from the cross here. Yeah, that's the first breakout, but then it has to like leave that area, right? So like when does it leave this bottom structure? It leaves it right here. So there's two markers where there's a jump. So one is like the middle of the middle structure. The other is the middle according to the jump, like the final jump out of the middle structure. So again, just to repeat that in case you're like completely confused with what I just did. One measurement is the middle of the middle. The second is the breakout from the middle. It's that simple. Just so I repeat it in different ways so you see what I'm saying. Hey, good morning, Goblin Slayer. So this one is significant in that it is much later, and this looks more like Wednesday. That makes sense. Both of those make sense. I could use either one. So one would suggest that, yeah, you're probably going to be breaking out, and you can see how that affects the timing later. One would suggest, yeah, you could have a breakout or a deciding moment today. And the other would say, no, you're not going to have it until Wednesday. And it could be a little bit of both. It could be both in that there's a hook here and then it drops down and then, so there is a move here, but there's no resolution. Totally possible. All right. Again, using this as a model, would have been pretty effective at that, but I think that looking back on it, it's a bit tricky. You know, there were times where, hang on, sorry. Yeah, there were times where I may have used this in, I don't know, like a particular way, again, that maybe nowadays I probably would be like, nah, I don't think I would do that again. So this middle to middle is pretty darn close. I don't know if you can see what I just did. It's very difficult to see it because there's so much noise here. But this one actually does a pretty decent job middle to middle. That's the center break right here. And then that's where it basically breaks out from the final push there. So that's the distance traveled. And I could take that same distance. Just do it again. Just kind of copy that same distance. I'll show you what I mean. And then that's roughly the same. It's not exactly the same. You can see there's a little bit of a difference. From like that bottom over, there's a bit of a gap right there. But it's not like a huge amount. And frankly, this was like, again, like a 4 or 5 day period. This is a little longer. So this might have been like 2 to 3 hours. It may not even been that much of a difference. If I go from here to here and do that instead, and maybe I could use like where this breaks out. I like the change of direction as a measurement as opposed to just like the bottoms or tops. I think change of direction and creek jumps matters more for wave analysis than bottoms and tops. Because bottoms and tops are really unreliable. They don't actually tell you very often where the actual middle of that wave is. They're very, very, very rarely, seldom are they actually the top of the wave. They often hit a top early or later than the actual middle of the wave itself. So the breakouts, the creek jumps are way more important in my opinion. So this would be this one right here. You can see that was where it jumped the creek. And, you know, it comes back down. So there's obviously, it's like saying, oh, we're going to come back low again, but you get the point. So yeah, that's pretty good. Again, is this off? Yeah, a bit. I mean, it's clearly going up. It's way up by then. But if you look at the actual time, that's not way, way off. So as an approximate measurement of like the wave distance, it's a pretty good one. And it certainly would not have worked to this breakout. That would have been even farther, you know, askew. So just to kind of show you the comparison, I'm not saying it's perfect, but it does help. So right now, like using that same information, could we determine exactly where it's going to be? Not really, not exactly, but we can get pretty close. I wish I could say it's always like perfect. This is so steep, it's hard to really even say. It really looks like it breaks out on the bottom. So it doesn't really give us much more information, but yeah. So again, I think if you were using this as the middle here, you probably have good reason to believe that that's kind of the end of it or close to it. Again, maybe off by an hour to 4 hours here. So between time periods, that's about as far as I take it. So there's certainly a chance that we see downside until Wednesday. And if we do, then I'm looking at 2210. But if not, I kind of think it should be basically done. Like it should be within the day today. The first time I did the measure, it was a little farther out. It was like out here afternoon. And who knows? The whole day, everything started very red today. So that would require some kind of market, maybe some kind of market turnaround, something going on. That might skew the market the other way. Wolf making you cry. I saw that. I'm not really sure what to make of it. I told you guys that I thought this might happen. You know what's weird is it's just one of those things where you kind of waiting for the bus and you just kind of miss it, you know. I had It doesn't look like I got this right. It just doesn't. But I actually had 3 markers here, and one was right there. One was at 70 cents. So I said that if it hit 70 cents, it might be a good buy-in. And I don't know if you can see this second marker here. This is what I was thinking, was that it may not go below 70 cents. And so I think it was last week or whenever it was, it hit 70 cents. I just didn't buy it. I don't know if I didn't have the liquidity or I just wasn't really looking at it. I don't remember why, but I thought it might hit 70 cents and then go all the way up to 140. And that was it. I mean, like, it did the move. I could have played from 70 cents to near 133. I don't know if I would have held, you know, just looking at it now, I probably would not have held on to it. I'm just being honest. Even if I had bought at 70 cents, I probably would have sold up here at 125. But it's really going. It's at 80% up. If it holds on to this level, I think it's going to make another pretty decent leg up. I think it'll go all the way up to maybe 3. Because right now it's at the bottom. It finally came back to that bottom. So if it can hold this bottom level, it should fill that gap up to 3. So it's still got room to run, believe it or not. And it's just squeezing. Would I chase it at this point? Probably not. It had filed for bankruptcy, and then they just announced like a restructuring. But I'm happy to see it above $1. That's always good. I'm just looking at the wave pattern here, and I'm like, right now it's just a retracement. It broke out of the creek. Could back up to $1.50 or something like that easily. There's a lot of intersection right there. And yeah, just kind of missed the boat on it. That's all there is. So if it comes back down, I'm looking at it holding above $1.40. If it doesn't do that, yada, 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 we can go all the way back down, really. Because it's still bankrupt. I mean, it is what it is. The restructuring is great. Maybe that changes a lot of things. At this point, I kind of want to scrap my chart and like redraw it. I think there's some really important markers here, but I don't know, it's a mess. So it's hard for me to see it anymore. But yeah, so this was that gap we had talked about right here. I thought it was going to get up in there and check it. I didn't think it would break it. So I thought it would get up in here and check that gap. And it just went right above it. You can see it's above there. So it's kind of crazy. It's a huge move. If you go to the cursor tag on the left side, you can turn off the candlestick values tooltip. You can turn off the candlestick values tooltip for when you're long pressing the mouse to move around the screen. Oh, that thing? How do you do that? I mean, I kind of like it, but yeah, I've been having some problems with it. How do you do that? On the left side, if you go to the cursor tag, this one. Ah, thank you. Yeah, they added that, didn't they? Because that didn't used to be on here. It was like super wonky. It's been causing me to like stop every now and then. Thank you so much. Yeah. So, Wolf, is it a buy? Is it a sell? If you're already in it, you can sell whenever you want. I mean, at this point, you're probably up 200% or more. I mean, you probably made huge amounts of money on this. But if you're chasing it, I think it's got a pretty decent chance going to run to like 360 if it can hold here. I really do. I think it could. There's another stopping place here at 272. Really, anything from 272 to 350 is probably a really good place to just be like, I'm done, if you're worried. It's already overbought on the hourly, but you know, it's been really oversold for a long time. So there's a big divergence here on this bottom. There's just a lot of good things about the setup that could mean it goes really far. But I'm really looking at that 315 gap. That's kind of the stopping point. I really don't know what else to do for you on this one. It's a great play if you're in it, but if you're not in it, it's a momentum play. So you probably want to just kind of check in and check out at specific intervals, at least for now. What about $8 to $12? We were talking about that not that long ago. Yeah, we were. I think, we got to go back and just kind of keep things in perspective. Like big picture wise, that was back here when the setup had these curves that were really high that could be bringing you back up from $6 back to $12. But since then, it's had a lot of breakdowns and changes. And one of the things that's noteworthy is this downward motion here. And that's not to be trifled with. So again, that takes you up to maybe $4, from here. If you were to go all the way up, that's really high. But if you don't break out of this area, you're not going anywhere. Like this is the trading range, right? So an auto reaction could be massive here, but you could still be stuck down here. So yeah, that's far from here. It's still $1.20 away or $1.60 away. This is just rocketing, I'm just saying like that's now present. So don't think that just because it's going up, it's 100% up today, it's going to suddenly be at $20 tomorrow. Great things can happen in stocks, like this. You never know. This is a squeeze play to some degree. I would just caution you that there's a lot of resistance right here that you're going to have to contend with. So just be careful. Again, I thought it would move from like 70 to 140, which is a 100% move. I didn't think it was going to break that quickly, and it did. So I missed it. So is there a possibility here that this has a wave breakout? Yeah. Now what's interesting is that I'm doing the same kind of measurement here on AMC, and I'm getting very similar results. Like this is very similar in some regards because you've got this pretty clear and evident walk down pattern. And if you look at where the breakdown happens, where the breakout happens, it was really here on May 28th, and the middle being, at least for now, defined as June 16th. So the potential for downside is certainly here, right? If this continues and it finishes perhaps what we might consider like a full downside, then I suppose what we're presuming is that it's going to break through this level and head really low. And this does take you back down to the April, gaps. Weirdly, this is kind of what we're seeing across the market, is we are having this sort of reset moment. And I was skeptical that this was going to happen in every stock in the in the market. It just seems a little silly. But I think I've said it a few times. Like, I kind of felt like we might just go back to those April dates. And some stocks, it's like we're way below them, and we haven't ever reset. And others went way above them. And I don't know. I know I've said it a few times. I was just kind of curious. I wonder if we're going to come back to these original tariff deadlines. And it looks very similar to that. Like here, it looks like it's trying to. So unfortunately, we already talked about the 315 drop and why that didn't work out. And ultimately, that was a weakness anyways. There's a lot we could talk about there, but we're not going to belay the point. We're not going to go backwards. We're just going to keep looking forward here. And now we're just really looking at the current setup as it is. Where is that support level? And it's right below us at like 277. And at this point, you're at a full retracement. It's beyond the 854, I think. I believe when we did this, we went from the second bottom up. We did this a couple of different ways, and this was the 854 is like right here at 272, very low. So right now we bounced off that 786, supposedly. It's not the best move, to come all the way down to the 854, but it is just a retracement. Beyond that, you're just in full throwback. But even if you came down to the 272, which is an 854 retracement, you might be like, well, that's not horrible. You could do an 854 retracement. AMC's had deep retracements in the past. It did it here. Yeah, it did. And if you recall, this is very similar in some ways because it has like this push up and then it has a secondary move up and it breaks down. It comes all the way back down to the 854. And similarly, this has a big push up, secondary push up, which is huge. And then it come all the way back to the 854. So, rinse, repeat, right? Sure, it's possible. And we had talked about why that might be the case because the on balance has yet to drop. I mean, it's just not dropping. Any way you cook this, it's just not looking particularly horrible for. Let me find the on balance volume here. Yeah. Oh, that's interesting. So I'm gonna eat my words there. That's really interesting. Okay. So what's going on there? Well, this was last week. It was already going up. Oh, this is not that interesting. I probably just forgot. Sorry. Not that interesting. I was like, why do I already have this on the chart? Oh, because it was probably already doing this last week. Yeah. Yeah, so we saw that retest and then it bounced. But it's interesting that it's come up above. It's higher. It's making a higher high as this is coming down. I feel like that's a hidden divergence, but I don't think it's bullish. I think it might be bearish. I'm not a big fan of that. I don't like this is coming back up to this level already. Because, yeah, that's right. Because we were talking about how, like, it was already at that rebound level, which was up here at, like, 330. And it hadn't, but for some reason, like, the price action hadn't gotten up to 330. So it was lagging behind quite a bit. Yeah, so it's not particularly helpful. I think we might be in trouble at like 315 again, which is not what I want. So, sorry, keep clicking it off. Anyways, so right now the setup looks very conducive to coming back down to the original tariff levels, which again is not particularly surprising. It's just, I mean, it's kind of frustrating. So what does that mean, Buxy? Is he going to like dump off of a cliff? I mean, it might consider that it might come down to the lows, all-time lows. We'll have to double check here, but just consider that this extended above. If it extends below, that's 247. Low of 246. It's basically a double bottom. That does present you with some interesting conversation points. I'll tell you what I'm going to do. We're going to do the math because I want to make sure it's 100% right. I don't want to just like doodle it. So the high here was 408. And we're saying that and you might be saying like there's probably a better way to do this, Booksy, but I'm going to do it this way. And we're going to use 318 because I think 318 is the average middle, and it's going to be the best middle that we have at this point. We had debated whether it was higher up at like 320 or lower down at like 312, but I think 318 is the right one. So that's like 90 cents. Yeah, that's 90 cents. So So 90 cents from 318. I'm going to type it out to give my brain some time to catch up to the math here. Easy way to do it is subtract $1 and then add 10 cents back. So 218, so 228. That's really low. So if it goes 90 cents, another 90 cents down, that's 228. But that's not actually, like, percentage-wise, is not the same thing. That's why it looks visually wrong. That'd be 228. So if it dropped another 90 cents, you got to think, like, what percentage is 90 cents of 408 versus what percentage of 90 cents is 318? It's significantly different. So there's a bit of a lapse here in the judgment. If you use just like price values and you say it drops 90 cents, then it drops another 90 cents, that's 228. But that's not actually, mathematically, that's not percentage-wise correct. That's not the same percentage drop, right? So 0.9 over 4.08, that's a 22% difference, right? So 22% times 3.18. So it's 70 cents, 0.70 versus 90 cents. That still seems wrong to me, but hang on. I think I might have done that wrong too. So 90 over 408 is equivalent to what over 318? Well, maybe it is 70 cents. I don't know, I'll try it again a different way. Because I feel like it's still too high, but proportionally that would be correct. .408 is to 90 as 318 is to 70. So if it has another equal percentage drop from the middle. But then this also brings up the question of, like, what is the percentage drop of an accurate retracement? You could keep going on this, like it could keep going forever and ever and ever, because you could look at the percentage drop of a retracement and then divide that in half. So like a 618 retracement of 408 divided into two parts, for example, would give you probably what we're getting already. You could also just look visually at, like, what's the 50-50 down. And again, we're on a logarithmic chart, so it's already giving you that when you look at it with the boxes. So that's accurate. But these are giving us, now that 2.28 is very curious because that's very similar to what we had seen before. But 2.48, that's actually giving us the right number because we had 2.47. So yeah, so that's correct. So we do it this way. We're just kind of looking at percentage drop, percentages from this distance down, this distance down. So this is a 90 cent and then a 70 cent drop. It's actually equal percentage drop from the top value. So that is a whatever percent drop and whatever percent drop, probably like 15% and then another 15%. But you're taking 15% of that value that you're starting at, not the top every time. So it's not 15% compared to 408 every time, right? It's 15% compared to 408, 15% roughly. It's like 16% or whatever, 16.5 or something like that each time. So yeah, 248 is a good target. That's essentially the bottom. So if it's going to have an extension all the way down, that's where it would go. And that does lead you back to tariff drop levels. So it is what it is. It's not a particularly enjoyable thought, but it's there. So right now, that's lingering. Timing wise, again, going from where it drops in, I think you have a similar GME, similar to the GME question, which is you have really two different dates. One is today and tomorrow, It's right here. Excuse me, because this is where it actually kind of has that entry right here on that 4 hour. And then from the peak, you're looking at an extended period of time. And that is the July 9th at 9:30. So, yeah, there's certainly a very strong symmetrical build out here. Like it or not. So this would suggest, yeah, it's right where we are. So this would suggest that you're going to like basically just kind of sit here right around 285. And then if it did mirror and continued, you'd have a massive drop down to 248. My guess is there'd be like a hook if that were to happen. How does that work with GameStop then? It's not that different, because if this has a rebound now, then obviously, like in that case, we're going back up right here. Again, it doesn't really matter. This could go all the way up and still have a 50-50 drop. The weird thing about setups like this is, again, sometimes you go up before you go down. So you remember this guy has this rebound, comes up to like 317, which is pretty similar to where this is at 313. And then it has a full drop down all the way through to the bottom. And it sets up there right around, again, that level. I would suggest that if we were looking at that similarly, I think it'd be pretty similar. It'd be pretty much the same thing. So you probably go from, and just see if it's already doing that, 313 down to the bottom. And yep, there it is. It's right there at 279. So you going outside?
No, I'm waiting for Mama.
Oh. Yeah, so this looks like it's already kind of setting up that way. And so in this case, it doesn't really matter. Like if this pumped up to $3, it could totally do that and still drop down, because, and it might even do that because you might have to have like a quick shakeout. Like it could have already happened. Technically, it came up above into the range. I told you first thing when I looked at this, I didn't really like that it came that high. That's not typically very bullish. Usually if it's bullish, it waits. I know it sounds weird, but it does. It doesn't usually go all the way back up into the range immediately. That was like a back test on that range, and then it's starting to fail the trend. So, yeah. Yeah, I hate to say it because I don't like it, but this seems very likely to me right now. Let's check out the, I mean, it's a heavy buy-in. This is pretty similar. This is July 1st. This is like way long. It looks like it's going to drop here. Yeah, it didn't check it either. So I hate to be like that. I know we were talking about it going up far, but it's not looking good. It's always a question of, yeah, it's pointing right to it without a shadow of a doubt. So these measures for the bear side are very clear. It's trying to get to 248. For the bull side, so we may end up with a test on the, we may get the 305 gap on a sudden break to the upside here. But then I'd be very concerned about a drop down through 276. Because this is very evidently here. And I wonder if it even gets that high. It could probably just stop short of getting to that actual 1 hour EMA. I'm looking at the wicks up top, that creek. Yeah, you could probably argue that it's not going to go that high. It's not impossible, but I would say like $3 to 306. And I think that's going to be it for now. What happened to the other ones? The bigger, higher targets, like 360 and 330s. They're not gone. The thing is like we are avoiding upside right now. So you got to remember, like, at some point that's going to catch up to the market. And remember, if this drops down, don't forget that on that 4 hour, this is already like looking kind of distributive on that, on balance in terms of like coming up already. So weirdly enough, even though this might have this kind of last push here and then crap out, I've got it kind of going long. I don't necessarily think this goes lower just yet. It might, but I wouldn't be surprised if this actually pushes up. So I'm going to redraw this real quick. I would not be surprised if when this has like another push, it goes quite high. And then when it comes down low, it's on a bit of a tilt here. Like we might actually have a divergence here. That's pretty extreme. I'd be curious about that. Very curious. There's one thing that I could tell you for sure in the market is that I'm usually behind. It's very rare that I'm like early. I'm usually behind. So if I have to pick one or the other, are you early or are you late? Are you on time? Most of the time I'm early. What would that be? What would that mean, Buxy? Well, I think, without getting too hyper speculative, I'm going to delete all this stuff real quick. I want to see it better.
Where's your wallet, child? Right over here?
I think what that might mean... Oh gosh, Wolf is just going, man. It's at 250. It's crazy. I think what that may mean, and I mean this sincerely, is that we were expecting that secondary move, and it seems like it's happening, but the price action isn't following through. And we got some similar gunk on the bottom here when it started turning back out. It started accelerating, but remember the price was just sitting there. Like this whole time period from like May to May 20th, it was really, really boring. The price wasn't really changing direction at all. I mean, it was a jump, but the on balance was like taking off without it. Now, there was no divergence. It's going up. This is going up. This clearly looks like it's, backwards if that's the case. But just pointing out the obvious, again, when this is coming down, the on balance is like turning around. There's a huge amount of time here where there's like a down and up, this whole V shape. And this goes back to April 21st. I mean, look at it. And you'll see what I mean. Like, this is already in a pivot. It's kind of indicating that there's potentially like some more smart money buy-in than maybe what looks like on the surface. There's like no volume, very flat and boring. And it's difficult, right, to see it coming. We saw it coming because of iterations and because of the change of character. So we're still looking for that here. But it wouldn't surprise me if that's already happening to some degree in this as well, where you're getting kind of a bottoming V shape. But we're in the midst of like kind of this middle portion around May. And it looks really ugly. And we're missing like a last drop here, perhaps. It may take some time. I'm just wondering if I'm a little bit late. That's all. And remember, like, again, looking back at this as an example, this was, again, fairly delayed price action by compared to the on balance volume. But when we look back and we say, did this ultimately end up coming back up to that hook, that M cross down? Well, you tell me, like, this is the methodology that I sit here and basically preach about every single day. I mean, you say whatever you want about my ability to get it right all the time. That's fine. But this is the methodology, is that this is creating a bullish pattern, right? And then if it continues and it has a change of character on the bottom, you're going to come back up in like a slingshot. Did it end up coming back up to above 370? Yeah. And then we can go backwards and look at all the other proofs that we had. But this is what we had on the on balance as well. And looking back at it, it's like, did it do it? Yeah. And I had another chart I looked at, and we did not get that off on timing. We said end of May. Like, by the time we hit this bottom and turn, the measurements were saying end of May. We got it right. So what it was like early on, we were just too early. We were back here. We were like looking at potential turns here. Could it have happened? Well, no, because again, there's weakness here. But these are the same, fractal-wise, they're kind of the same exact thing. And that was the point I was making when it did happen, was that, well, it's a change of character. You have a different setup, right? This didn't make a new low, and then it broke out. And that was all there was to it. So if it breaks again, it's going to go, and it's going to go hard. So we're looking at something in a similar light here, saying, could we just be late? Is it just never going to happen? Look, man, if you go to any channel that's kind of bearish right now, they're going to say, and I would genuinely agree with them, they're going to say it's going to come down to like the twos. I would say, like, yeah, it might do that. I've been saying that for a year. You know what I mean? It's probably going to come back down again. But, and even here, it's like we were saying, oh, it's going to go to 4 and then potentially drop to new lows. Yes, but a lot of times it goes up before it goes down. And right now that on balance does not look broken down to me. It's missing what I would say is like the second ear. It could be here, like it could be in the midst of this, but I feel like it's just not here, right? So I'm wondering if we're going to get like maybe some kind of a divergence here and get back up above these levels. I don't know. And then have like a massive drop. It's hard to say. I could be early is what I'm saying. And we're thinking that, well, either, like, because the temptation right now for me is to just honestly to think that we just missed it. We're just not going to get it. But then I keep looking up here and I'm like, I don't know, man. It really looks like this setup again, where you're just kind of avoiding going back up and you're dawdling, and then it's going to make some kind of a move later. Speaking of tariff stuff, you guys tell me what your opinion is, but and I'll talk about the days to cover in just a second, but tell me what your opinion is. What do you think about that August 1st bit? Because we've been talking about August for a while, and I find it really curious. Not that I want to prove anything right or wrong, but the Secretary of the Treasury, Besant, whatever the guy's name is, he said that the auto tariffs they would slingshot, the tariff announcements would slingshot and go into effect on August 1st. I find that to be very curious because it's almost like he's already cued the market in, which is very strange to me. Like, why not wait until Wednesday? I don't know if they expected this big, beautiful bill nonsense to like, which I don't like the bill for a lot of reasons. I think most people don't like it. So we're all asking, why did it pass? But it did pass. I've not talked to anybody who really thinks it's good. And I have conservative parents even, and they're like, I don't like this bill for a lot of reasons. But like, whatever. It passed. I think they were expecting that to be like this big, great market thing. And now the market's like dumping. And they're talking about, they announced it ahead of time, like, hey, these tariffs are going to boomerang back, is what he said. This was on the news yesterday. And you're going to get these tariffs implemented on August 1st, which I find to be kind of strange. Like, why announce that ahead of... It kind of bothers me because... I guess it bothers me because the lack of deals. Like, there's been no secrecy about the deals. And I thought that there was a second announcement, and correct me if I'm wrong, but there was like a second tease because if I recall, and I don't know if it was Donald Trump, the president Donald Trump said it, and I'd have to go back and look, but I specifically remember there would be news about trade deals leading up to Wednesday, but not until after this bill was signed or something. And I don't remember that at all. So now I'm kind of like butchering it. But now I thought that that was what was said. So I thought the idea was we're going to announce all these trade deals. Like he said, we'd have news, but we're not going to talk about them until after the 4th is what I recall the headline being. So I just found it very odd. Why announce the August 1st boomerang thing? Like that doesn't bode well. It kind of gives you like a feeling that maybe July will boom, but then we're really setting up for a dump into August. I just found it to be very curious. So I don't know. Let me know your thoughts on that. I'm not tinfoil hatting. I genuinely want to know if other people have different opinions about why that was announced ahead of this date. I just found that to be very strange. And frankly, and I'm not trying to continually rag on the administration. Y'all know I'm very moderate in my political leanings, and I haven't been exactly thrilled about everything that's gone on. But the news as it comes out has been very inconsistent from different sources, so that's another thing. They've got like a PR problem. Like they're not speaking with one voice. They're often speaking with like 2 to 3 voices, which is confusing. Like president will say one thing, secretary of treasury will say another, like a day apart, you know. What do I think about 32 days to cover? I don't know. What's July 7th plus 32 days? That'd be my first question, because I wonder if days to cover matters that much. It looks like it's going to be right after earnings on the 8th. Or if it's more indicative of like, we're going to balance this until a particular day and then let it go. Think about it like we can kind of have like a maximum amount of time. Because if you think about days to cover, if it didn't change at all, if it stayed exactly as it was, then as soon as they let it go, you'd have like a 32-day window, which sounds like a huge amount of time. 7 weeks and 2 days. It looks like August 8th in terms of trading days. So that may not be the same in terms of actual days. Actual days might be a little longer because trading days, there's less trading days in a week, right? But I'm not sure. Or maybe it'd be longer if it's trading days. Excuse me, I said that wrong. Yeah, I just measured it on the chart. Well, I appreciate your thoughts on the tariff policy. I don't know if that's, I appreciate you speaking up. You can have your own opinion about it. You might think they're great. You might think they're terrible. I'm really more curious about the effect on the market with the comments about August 1st, end of August. This says marks off 32 days right here, and it's beginning of August. Why are we getting such different dates? $8.20 from 7.7, 32 trading days. Does this count when you measure this on TradingView? Does it count like days in between? I wonder. Let me test it out real quick. So today's Monday. Let's go to the next Monday. Oh, it does. Yeah, it does. All right, so this counts weekends as days, so that's not right. But you'd say you're just saying it's August 20th? I believe you. Thank you for fixing that. Apparently, TradingView counts the days. I mean, I guess it makes sense. I don't know. I always thought it should just count the trading days, but Wednesday, August 20th? Guys, that sounds about right. Doesn't it? I mean, if you look at our timeline, I'm not saying we're perfect here, but if you look at our timeline, that's pretty dang close. I had the bottom on like the 18th. That would be right after OPEX, like the third week, right? So, I mean, you're talking about August 18th going into the 20th, that being like the third week of August. Oh, it's doing it again. I got to do this on every single one of these charts. I guess I do. So that's 32 days to cover. So they could reset that if they were able to cover over the next 32 days down. It could reset to 0, but they have to be continually covering on the way down. Why does August 20th matter? If you have to ask that question, you're not paying attention. It's not a trick question, but guys, August 20th is super freaking important for AMC. And I mean that in a very, very literal way. So August 20th was, August 22nd specifically to the 24th, roughly. That is where we had our reverse split. It was August 23rd, 2023. Guess what? That didn't change the year prior either. If you go back to, that was near the Judge Zern decision. Go back to when APE was created. It's August the 22nd. Coincidence? Or cycle? That's exactly like a year. From APE inception to split. And then we're looking at exactly how many years now? 2 years here down. So do we think we're going to squeeze on August 22nd, Booksy? Is that what you're trying to say? I've been trying to say that for like a year, guys. I've been talking about the September is really like the 2-year mark. In theory, if you look at 87 years, Booksy, if you look at where that marker has the move into the range, it's between August 22nd, 23rd, and September 11th. Maybe even as early as the 6th, but specifically this window right here. And I've been saying for a while, I think this is a 2-year cycle. So the expectation is it should break in August, which is really weird. It's a weird time to break. The market is typically not doing very well by October. That's usually a downward period more often than not, like statistically speaking. That doesn't mean it couldn't be different. Now, curiously for AMC, and what some of you are probably going to be quick to note is that right before this period of time, there's been a push-up. So this rallied going into August, didn't it? In fact, this rallied going into August 8th, which is where we have roughly where that earnings took place on the 4th. And then it rallied here into the end of July, July 24th. What about years recently? Well, while there's no rally here, so to speak, there is a push-up going into July, and then it ultimately peaks on the 23rd. It's ugly, but that is where the top is. I mean, it does kind of peak right there. It's just a giant upthrust. And I don't think you could have traded that very efficiently, but it is there. And then August tends to be kind of like a slump then, sort of sends you down. So we'd be talking about a reversal of that pattern if this is a 2-year cycle. Look at the big picture here. You can see the cat ear forming. I think we need to really just kind of remember what it is we're talking about. I know it sounds stupid to say that, but I really think that what we're talking about here, this like final push-up that we're looking for, I really think what we're actually talking about is a repeat. We're doing the iteration dance. And we've gone through this like a number of times on the channel. And I've made the argument more than once on here that I think that this is essentially just a gigantic copy of the big picture. And then when you look at it from that point of view, it makes perfect sense because this motion here with the breakout, this is why we were saying like it could happen in a matter of days. It ended up taking a lot longer. That was the only thing that was kind of like, oh, you know, when we first drew it out, I had it going kind of straight up. And I said, I thought maybe it could just go straight up because why not? It did it last time right here. It did the same thing. And I was just saying, like, I think this is just an iteration of the same things. The problem being is that these iterations have to be, and this is good news because they're actually going down, which is actually good. If this were going up to the upside, we'd be in big trouble. But they're actually going down, which is a good thing. So these iterations indicate kind of a good and a bad. It's like a double-edged sword. So on the one hand, it's good because they're going down overall. Like big picture-wise, they're chopping downward, which actually is positive. But it's negative because typically at the end of a cat ear sequence like this, you do get a final drop. So it's both good and bad. So from this point of view, we're not going to use the tippy top here because I think the shift happened, right? But from this point of view, you'd say like that and that are the same, essentially, is what I'm trying to get at. So you would use this guy, and it probably would be wise to even do this because this would go backwards. I think we did this before. Let me do it on here real quick. I think we did this before. And when you use the shift values correctly, yeah, it's like right there. That's the same marker. Granted, we could do it a couple different ways, but I don't want to. Yeah, that's fine. We do it that way. So this is right here. So what are we really talking about, right? We're talking about like the same motion occurring. Like you have this big push up and you got a distribution. There's the hook, the flattening, right? The LSPY, and then it drops and tries to approach a new low. And historically, it's been pretty successful at doing that on the big picture. And this would be a distribution off the bottom, which is now lower because of the shift. And it did distribute off the bottom. So what we were doing is we were looking at how that might then play into the next setup. And you can kind of see it visually here, is that if this were to distribute again through the next bottom, if this is, again, a repeat of the bigger picture, you're starting to see how that plays into itself. This is kind of the good and the bad of, it's weird how that moving average is right where it's supposed to be too on the shift. Super strange. Anyways, this kind of plays into itself as a repeat of a lot of things. But I don't want to get too deep into that, I guess. So what are you trying to say, man? What's going to happen? I guess what I'm trying to say is like, if it continues to do the same thing, then we're missing an upthrust here. That's what I'm trying to say. The question isn't really will it do it, it's where will it do it. So we have one, so this would be like the iteration that you experienced to some degree here. I'll make sure I get it right. Yeah, to some degree like this guy. So this is the same motion. And I don't really care that it's not perfect. That's not more important to me. You got maybe looking at this like, well, that's not the low. Why don't you just use that? I mean, you can, but it almost doesn't really make a huge difference. I think this represents a better value because this shows you where that breakdown is. And notice it's like the same thing here. I'm specifically using this because it's above and it's less noisy. So it's like, this actually does a good job of showing you where that hook is right there. Whereas the low doesn't really do that. So that's probably why I would do that. And then I would leave it like that. So what's missing is a reaction back to this part again, which is low, unfortunately. So if this were to drop down, it should react back up. But I think we're going to start changing character because we have to start changing at some point. It's almost like a head and shoulder. Now I wonder if it is a head and shoulder of sorts. Could be. I think that's a bit of a stretch. I don't think it's a head and shoulder. I take that back. I think that's a bit much. But it would be worth noting that this drop in right here is where that came back to retest. It ultimately becomes like the most important spot. So where is the drop in here? This is the weakness. The sign of weakness is really extreme, and the drop in is right there. All right, so then let's take this to the... Yeah, I mean, this is a tough one because it just depends on how you define where these bottoms are, but I think this might be the accurate spot to look at. To draw the comparison to the smaller setup. And so if that's the case, then yeah, we've pretty much already done it. That doesn't make me feel good. Right there at 303. Yeah, that is interesting. So it did already come back up and do that big hook. If that's the case. So then why are you thinking there's going to be another one, Booksy? Where does that even come from? There's this one, but that would only go back up to this bottom. It's at the bottom here. So unless it didn't go high enough, and we're actually witnessing kind of like what we did back here. Remember like when it first dropped down and it does this hook and people were like, well, you're dumb, Booksy. Only one person said that. Only one person was like, you're wrong. But it didn't come high enough, and I kept saying, like, that's not right. It should have come up to 4, and it only came to 370. But that ended up only being, like, the first part of the reaction, and then it did come up and hit where it was supposed to hit. So I wonder if this didn't come high enough, if we could make that same argument. But I'd have to figure out where that actually is. And I don't know if I can do a good job of that. Because of the way this distributed, it already did hit that marker. So we're getting a lot of information, actually. This may seem like a little like out there and bonkers, but the truth is like the gap here, I can't stress enough how these gaps are not unimportant. Like, just because we haven't hit them yet does not mean we're not going to hit them. I think it's super significant that we haven't hit them. And the fact is that there's still a gap up here after all this time, right? There's still a gap level up here from where that drop down starts, from where this drop down starts. Both of these, all of these iterations, all three of them have these markers that signify where these drop ledges are. So this one's right here at 15 up to about 20. It goes up to like 1960 or something like that. That gap level has not been tested, right? And then the next one is here. It's at 5 down to 450. These are super important markers because notice that, gosh, it's exactly the same. Notice that the hook down, I mean, it's brilliantly the same. I kind of love it because this marker right here doesn't reach it. It doesn't go high enough. And it does the exact same thing here. Exactly the same. This comes down, it doesn't go high enough. See how like both times it like avoids the gap? And this gap is being created by that LSPY ledge, by that cat ear ledge. So it's hard to see it here because of the shift and because it was so downward. I know we've talked about it quite a bit, but that's the marker. It represents the same area. I'll make it like really bright yellow or something ridiculous. So you can see it. That represents the same area here in terms of like what's being checked out and what's being lost and where the distribution is. So what's fascinating is that they're leaving this gap behind. They're just kind of teasing it out. Like, we're going to go get it, but not really. And we knew that we knew it wasn't very likely that it was kind of come up to 5. I kept saying it repeatedly. Like, I just think that's being used as a, you know, a kind of a, I don't know, misdirection, if you will. But what's fascinating is that this ledge, some of you guys are going to say, well, that means it's coming back to 50, right? And I'm going to say, what? No, because the shift value happened. So as a result, it's no longer 50. Now it's here at like 20. And I've talked about this repeatedly. So hopefully that's not a surprise to you. But these shift values, the red mark right here indicates a shift value. This is not the actual price movement. The actual price movement should look more like this because it's been shifted down. So yellow represents like actual price movement. This would have been pre-shift. Like if we had never shifted, this would be where we'd be setting up and we would be breaking out at like $1. We might hit $1 and then go all the way back up to like 50 because we should come back to that ledge. But because we shifted down, you know, 226%, now all those values are shifted down. And it works. It clicks very well, but you have to keep into consideration, this is not the price action that I'm looking for. So just so you know, if you're looking at that red line, you might be thinking like, that's where we're going to go? No, that's like pre-shift. Like that's already gone. That ship has sailed at this point. These are pre-shift targets, and these are not targets that I'm looking for. The shifted targets are exactly where they should be, and they're in a different spot. So just keep in mind, like I've already gone through this several times. I'm not going to go through it right now why that shift is legit, but it's, in my opinion, it's not negotiable. And I think there's a very real reality here that is what is being targeted, and it makes sense because this is very slow, the buy up. The trend trajectories here are way different than they were in 2020. They're all extremely low by comparison. They're this area right here. And it makes perfect sense when you look at the big picture because that's where the creek is now. It's like really low. So what this means is that, yeah, I could get there in one go maybe, but it's more likely it's going to get there in 2026. And that's actually the pinnacle of the move. This is typically right here, this little bracket. This is typically where we see the top distribution right here between these two markers. And that's where we saw it in 2020. And it's right where it should be. Everything is pointing to the right place for 2026. And it is not 50. And that, again, that ship sailed back in December. There's nothing I can do about that at this point. I could fudge the numbers and tell you that it's going to go way higher. But I think it's obeying the shift principles. So the point in saying all this is that we're not trying to do the same thing every day on this stream, but the point in saying all that is that right now, if you look at the current setup, I posted this on the Discord. I didn't talk about it in the video, So what I did is I took a macro view and I divided it into sections. So I'm going to go to the daily. And now we're looking at this. Might as well do it. I divided this into a giant trend. Super straightforward, super simple. Now, if it went back to the top of the trend, then yes, it should go to 50. However, when you look at the build out on this bottom and where these guys are setting up, right, there's a clear and evident path to get you above the 50% marker on the first move. That is not the case in the present time frame. In the present time frame, if you do a 50-50, it only gets you up to just below the 50% marker. And then when you do the measurement, so it's hard to see it now that I've drawn all this other garbage on here. Let me get rid of that real quick. We'll come back to that in a minute. But when you look at the current setup, based on where these guys set up, this is like a middle mark right here. And we're talking about the last year, basically. We're talking about from May 2024 through December 2024. That's the equivalent of the time period here during this setup. It is right on the button where it should be on these parallels. Like, it is a straight line shot, and it obeys the same principles that were being used back here in this 2-year cycle, but for one thing, which is the targets. The targets are lower. They just are not as high. So the whipsaw here does not get you up above this macro middle anymore. Interestingly, and this is the kind of the fascinating part to me, is it gets you above what would be considered like the shift value from the middle. So if you look at that marker and that movement here, this indication right here ends up being like essentially your shift value. Like, it's exactly the same, which is kind of crazy. So I think what is going on is pretty straightforward. It's not actually that complex. It seems complex because Booksy's a weirdo and he has all these weird numbers, but in reality, it's just shifted down like that percentage. And so when you look at it from that point of view, it's not that complex. It's the same move, but it's happening lower, and it's not going as far as a result. So that particular build out does a 50-50 cross up to the top that you're supposed to get to from the bottom to the top through that middle on that channel. But this one sets up high, so when it breaks out, I don't know if you can see it very easily. So this ends up whipping around and holding here. And this is the middle of the channel right here. And you can see that that's built out along this kind of squishy middle coming down. There's support, 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 resistance, 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 support. It's not a question, it's just there, right? I don't have to ask where those are, you can see them. This is hindsight, it's very easy to tell. That's where they are right there coming through. When you do the parallel and you make the same exact structure, it gives you a really simple, like, oh, that's how it came back up to those same levels that it was going to in the 2-year cycle. And I had been talking about how that wasn't really the case here because it looked like it was at an angle. So I marked off with this dotted line. Here, I'll make this a little lighter for a moment. I marked off with this dotted line here where that top is. And I was like, well, that's where it should go, right? It's the same setup where it should be laying up on top of this. This should be a 50-50 stride from bottom to top that lays you up above that jump. It should drop you right there above the top when it does the 50-50 jump above, right? Hops up there, gets above that creek. If it's the same setup, which a lot of people want to say it is, and I agree that it's similar in terms of waveform, it should lay you up right above that top. I marked it off and it works. It's correct. Because the 50-50 here, even though it only gets you back to the middle of the macro channel, it's the correct percentage drop move. This is the same 1-2 right here. So they use the same percentage like here as they do here. Right? And then that middle, which is where that resistance is right there, look at where that is in the grand scheme of things. You can see that this push up then makes sense because it pushed up into it, drops back down. And when you look at that as a 50-50 glide up, it places you right in the pocket where you want to trade, which is between roughly 530, which is the top of this area, right? And the bottom of the previous zone, which is the untraded region. So it's in the right spot at the right time. The measurements are correct. If it goes down, to a new low here, as low as $2, and it could go lower, but I don't really want to get into that just now because it almost doesn't matter as long as it makes like a dip. It makes very little difference. It will probably have a higher push to the upside if the spring goes below the floor farther. So just FYI, I don't think there's going to be a buy button removal this time. I don't think that is part of the equation here. So what I'm looking at is just a normal spring move. I think the floor has been roughly established already. So you already have a floor at like 240. So any distance you travel below 240 is basically distance you're going to travel above like 750. So if you travel below 240 down to $1, when you get back to the top here, there's a potential this goes up to like $9.30 or whatever, what have you. If it doesn't go any higher than that, and I think it could go up to like 11, but if it didn't go any higher than that, it would not surprise me at all. If this was like the way in which this sets up, you would have essentially like a consolidation here around what is, I think, the rough middle, which is like 645 down to 613. That would be where it would consolidate. All those numbers make really good sense. Now, someone was saying in our Discord group that anybody that calls for $20 or double digits is talking about hopium. I don't think so, because this is a 2-year down wave. It's a 2-year gigantic double bottom. You're going to have a distribution of some kind if there's any accumulation going on at all. And there is, because we already know that Vanguard owns like 40 million shares. So this idea that it has to be fundamentally secured or else it's never going to go back up. Guys, it wasn't fundamentally secured back here either. And this has already been going down this whole time. It's like, I'm not talking about a moonshot here. I'm talking about a really honest to goodness like reaction that makes sense. The shift value, curiously, again, I've said it once, I'll say it again. The shift value is actually this divided into quarters. So if you look at the quarter system, it's quite reasonable because you divide this into quarters and you're like, oh, well, the shift is basically just like a quarter of the range that they're doing. Again, I think that was built into the design here when this was taken down from August to August, that was part of the overall picture. Like, go back to where it kind of creates, again, itself in August 2022. Where does it drop? Exactly that shift value away from where it started. So, like, the measurements were already there. They're just being used. And it's like basically a quarter system. So all of that being said, should you look at this as the top? No, really the shift target is the top. Because at this point, everything has dropped that value, that percentage value. So the new top is no longer here. Now, that might be very concerning if you're looking at this on the downside, because you might say, well, does that mean that the new bottom is now a quarter below where the previous bottom was? I don't know. Maybe. But I think, again, it's already had the shift down. Like, it already did the drop. It already did that shift down, a quarter down. That's why we have this setting up where it does, like below. Yeah, but that's the same bottom that was already there. I know. And this is where things get kind of dicey because we could go back and forth about whether it's going to get new lows and blah, 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 blah. The point is, the setup as it stands right now is still intact. And it's a nice setup. And this is a very simple way, I think, of looking at it, to be honest. It may be a little bit confusing to some, but really not that confusing. Like, this particular bottom has a spring action to it. It's an accumulative bottom at the end of the day. Pushes up above. Once it reaches here, it does a 50-50. When you look at the same markers, in order to get to that top target, And I'm estimating it right now based on where I think is most likely. I have it at 2060, 2059. There's possibility that I'm a little off. Obviously, that's a pretty big guess to say, like, you think it's $20. You think it's exactly that amount. Well, I can't say with 100% certainty that's exactly where it's going to be. But I do think that's approximately where I would place it. I did the shift target based on the numbers. That's what I got. Maybe it's a little off. I don't really care. In some ways, I don't care. I'm like, well, if it's off by like 30 cents or something. What makes the most sense to me is this, because again, this is what we had predicted a long time ago, that would be the highs would be out there in February and potentially March, I guess, at the latest. Although I think you could get there in February and then crap out later on in like April or May. Kind of in a reversal of what we're seeing here, right? Look at this from the point of view, like the helicopter point of view of like a 50-50 turnaround. And you'll also see what I'm saying seems really quite simple, because if you notice, this has this kind of push up and then a drop down through, and take that into consideration with just a really basic swivel. And you can see that the breakout here, and I can't be exactly sure where that is in the middle. There's probably a little tiny hook there, but I can't see it very well. Let me double check. Let's zoom in. This is a tough one. But it's the same thing we were just doing like a minute ago. I'm just trying to find the right, like we were doing it like, not a minute, like an hour ago. I was trying to find the right marker. Yeah, so there's a drop in here. This is August 11th. So the full rotation here is like August 11th. That could mean a lot of different things, because in theory, this hits here earlier, right? So if you were using that as the middle, you would say that, well, that might be true, Booksy, but that wraparound then means that we should be hitting a low going into July 14th, which is realistic. I think it's possible. What if that's not it, though? Well, I don't know. There's a lot of what ifs here when you get to this middle area. Like, first I'd have to say that this is beyond a shadow of a doubt the correct mark. That's the first thing. This is just another way of looking at the same information, by the way. This is just a rotational symmetry. I think that the September 11th area going into beyond that might still be the best. It could be earlier. So why did we start this? We started this again, this big view, because days to cover now puts us out at August 20th, which is a very significant date for AMC, right? So in determining where that middle is, you do have a really good chance of determining where the low is and then where the high is. If this is a reversal motion to whip you back around, then yeah, it's already set up, right? How do you know you're right? What if it's this one instead? You know, this is where we get into the bigger, like, obnoxious questions that really frustrate most people. They frustrate me, by the way. If you think that they don't frustrate me, you're not taking me the right way. Because I get frustrated. I'm like, well, where is it? You know, that's very different. That's a very high marker. That would suggest you'd be up in this time, not down. You know, it's kind of backwards. My point being is that it almost doesn't matter, because in the end, and this again, this being the shift value, this red marker, don't worry about that. In the end, it still terminates around this time period. It still goes up around this time period. Maybe it's a week or two off on either side. I don't know. But that's the marker that I would use. And I think there's two, but those are the ones that I would probably look at the most seriously. And yeah, it's tricky. I don't know. Should I use the drop, or should I use the place that I think it crossed down? Because the drop is right here. That would be July 8th, which certainly looks right. When you look at here through July, when you look at, I don't know how they could have known that, May 14th through the drop date, December 6th, that terminates on July 8th, which is tomorrow, and that's right before that tariff deadline. What if we just don't get another low, man? I don't know what to say. I would say that anywhere below 260, I mean, anywhere really below like 3 is probably a good buy anyways. I wouldn't be worried about if it drops low, whatever, but anything below that's good. I'm more concerned about the overall. We really got to get a lock on this. I need to get a lock on it. I feel like we can do it. I was very reluctant to stream today. So I was like not wanting to do it because I'm like, there's nothing new to talk about. But I think I need to make an effort to get a lockdown on this. We've been back and forth with these dates, and I feel like we're really we're at the point where I should be able to make a solid estimation. We know 248 is a likely target. I'm going to leave that on the screen for now. That's a short-term target. You could have a little bit more upside, but unfortunately, that's kind of where it is at the moment. Like if it drops, that's a possible downside target. If it stays above 278, a little bit stronger, you might have that bigger reaction to 333. So I think if it stays higher, you could get that bigger reaction still to 333. I don't think that that's wrong to look for. I mentioned that there is a reactive move that often happens here, and that is where it would be. So I don't think that that's wrong, all right? I don't think that's impossible, but I think that's just a reactive move. I don't think that that's like a breakout move. I think it just goes up, hits 333 potentially, hits 333 and then drops again. However, that only happens if it stays kind of strong here, and I'm not optimistic that it goes well beyond, in any case, it goes well beyond Wednesday if it did do that. That's just coming back up and testing this level, which again, is not any different than what we saw here. Like when this guy reacts back to the upside, we thought, well, it already did that. It already did this reaction. And that's what I was getting at with the iterations is like, yeah, it definitely did do that. It had a weakness and then it goes back up and then it drops low. And at that point, a lot of people said, well, it's not going back to 4. They were mad because it didn't go to 4. And I said it was going to go to 4. It only went to 370. But I said, I still think it's going to go to 4 because it did the same thing back here when it reacted. And I said, I think it's going to go to like 14. And then I'm waiting and it doesn't go to 14. And I'm like, okay, well, what's going to happen? And then it goes in reverse order. It goes down to 2 first, then 14. Because I originally said 14 to 250. I thought it would happen actually right here. I thought it would go back up 14 to 250. The point being is that the motion here of, hey, we're going up or we're going down before we go up is not unusual. This happened before. Or it didn't come quite high enough and then it does it later, but it still didn't get that gap. Same thing here. It didn't come quite high enough, but then it does it later, still doesn't get that gap. Perfect iteration, perfect copy paste of the same behavior pattern. Did it before, by the way, on the macro chart in this move, right? So like we have, and then the bigger move we can talk about. Anyway, so we have evidence this is very much the case. So if you did the same thing here, and you're looking at this saying, well, it didn't come up high enough. You said it might go to 330 and it failed. Yeah, it definitely failed. It didn't come back above 315. What I'm trying to say is I'm not 100% sure, but I think this is the same thing. I really do. I think this motion right here is probably the same motion, which would suggest that we are going to probably head down. I wonder how big that could be, though. You know, that's the question. I don't know how far it's going to go. There's evidence, very real evidence, it could go down as low as 248. But if it goes to 248 and then it reacted all the way back up, wouldn't that be like too slow to react all the way back up to 330 or something by like earnings? Isn't that like too slow? That's really slow. That would be consistent though with what we saw there. It's kind of the same thing too. This is an earnings build out. That'd be really slow. And then what? I don't know. Would that not constitute a change of character on the big picture? Well, the short answer is yes. However, one thing I always note about cat ears is they typically have distribution patterns that are 4 long, like 4 ends, right? 4 points. You can't really count them very easily here. But I would suggest that this is probably 1. If this is not 1, this is 1, 2, 3, 4. So how would that work if it doesn't have... Yeah, I talked about Wolf earlier. It could go up to $3 or more, but it's so far I just can't recommend it. If this is only targeting 248, there's no spring. We're pretty sure that that's right. We think numerically that makes the most sense. The 228 is there, but it's like numerically it's not quite right. And then the question that I have to ask is, where is this gap presently? And it would be right here. So actually, or here, there's 2. Come on, Booksy. Why are you confident that it's only a 2-year cycle? Because I think on the bigger picture, it's not going to all-time highs. So the question to me isn't about, and also because of this, like this marker right here represents like a midpoint of sorts. There's a lot of reasons why I'm pretty confident it's a 2-year cycle. A lot of it has to do just with timing of the build out down and what's gone on at the first bottom and then the middle point. There's only a couple different middle points that I would use. So I'm fairly confident at this point that it's correct. So then the creek cross is another one. I forgot about that. So this is the low. And then the creek cross is actually here. So it's the middle of the low. That's a very different measure. That doesn't get you to the 20th or the 11th. That's really early. Well, that could be a really useful one though, because this takes you basically to the next peak. So it goes from peak to cross to peak. So that's evenly spaced. 1, 2, 3. Peak to peak to peak. I want to give you more evidence that it's just 2 years. But there is a sine wave that I did, I think in January of 2024. My brain is filled with all kinds of fun little dates. So I did it a year and a half ago at this point, and that sine wave was very, very, very slow when it got to this next overall picture. And I don't want to go through this in huge detail, but that was the first time that I got a sense that this might take a really long time. That it might be very, very slow. And so it came from here. It really starts here and it builds out in a what we would call a fib time zone. I'm going to try to do it right here. I can't remember exactly where it was. I think this was pretty close. Maybe it was like this. I don't know. Anyways, I'd have to go back and look, but basically like it was a measurement from top, bottom, top. And I'd have to find that chart because there was a reason I did what I did on it, and I can't remember where I put it. Yeah, that might be it. But anyways, what I found was that they're all terminating right around here. So what I found was that there was a really long wait. And then if you look at this as a double up, a double down, a double up, a double down, you can see the expansion that's going on. And then this is a gigantic like double up right here. And then there should have been a double down. Well, this is the motion that I was tracking when I was looking at the wave expansion. So I had like a wave that I built. I had to build it because it didn't have adequate, you can't make it with a sine wave. So you have to build it like more or less manually. You could use S curves, I guess. But what it represents is accumulation distribution. So if you look at the accumulation and distribution cycles, they're not that complex. They seem like they would be more elaborate. They're pretty straightforward. And they all kind of run through the same marker. So I did this really big macro schematic, and there was a marker that came through, I think the middle here, that represented it. And you can see where we are now. We're coming up on the other side of it right now. So this is another way of looking at kind of the same information. And I'm using really bold markers, but this would signify what? That you're in like a really long cycle. And this is what kind of, I think, frankly, I don't want to say this is the reason. There's a lot of reasons, but this is part of the reason why I think my channel kind of took a hit. To be honest, I mean, I was like, this is when the down started because the AMC had this particular setup where the fib time zones were starting to look really bad. And it basically was like, yeah, you're going into a down cycle that's going to be very long. And so this represents like the first half of it. And look at where we are. I mean, come on, right? If I had kept that one chart and I'd only use that chart forever and ever, amen, I would be like, people would be like, what, Booksy? You've had that the whole time? I had this chart built in 2024. I used a fib time zone to get the chart mapping. I used some really basic common sense on a widening. But I was really looking at this confused because it went so far down, it never distributed high again, unless you count that extended hours. I've talked about why I think that is now because of the chart shift. Okay? When you look at this big picture and you just think about it as like a widening, it's easy enough to say like, it's just a widening, Booksy. This is so simple. You guys are making this way too complicated, right? all you got to do is do a chart widening and you'll get your answer. And there it is, right? There's the top right here, right where it's supposed to be. And I would say, yeah, it is. So what it represents is very similar to the same thing that was represented here when this guy came back up to the top and broke out. It's the same concept. Well, shouldn't that mean it goes all the way back to the top, all-time top? Eventually, yeah. But over this course of like a long period of time. Because remember, this is a downward trajectory of like 43 degrees. So if it breaks out here at 43 degrees, oh, look at that. There's already trajectories pointing up at 43 degrees. Surprising nobody, because that's the way the market likes to do things. Are you being facetious? No, I'm not. I'm genuinely telling you, like, that is the exact same marker that's already in line right now. Like, that's the literal ICE value that we just drew on this bottom. It's already there. Okay, that's the out trajectory. But if you look at how long it takes to get back up and you take into consideration the shift value, then if you look at where this guy actually starts the breakdown, it would be considered right here. Like, that's the valuation of the breakdown. It's like right on this center pivot. So this is Bulkowski 101 right here. This should be 238. But if you take into consideration the shift, which I believe is a real thing, like I don't think it's imaginary, I think it's a real thing. What that would mean is that you're not actually going to get back to that level. You're going to come back instead to this level at 106. I've talked about this religiously, guys. Look at where that is. It's the bottom of the original opening price. It's literally the opening price of AMC. Like, I don't know why I get so heated about it. Because I think most of you guys in general, you're probably looking at it like I'm looking at it like, yeah, that seems right, you know? But I feel like there's a lot of people out there that are still in this kind of weird la-la land where they think that it's going to go to zero or they think it's going to go to the moon. And they're not looking at like the basics of this waveform pattern. Why should it come back up there? I mean, there it is. But this doesn't give you any kind of indication that this is going to happen overnight. Like, this is a very long-winded cycle. And if you look at where that intersection is on the shift value, compared to where that break point here is, it's December 2027. Possibly even before then, but that's where it is, right? So like there's this issue of like, where does that now intersect this macro wave? It's no longer way up here at 234. Now it's up here at 109, 108, 105. Some people are like, never going to get to $105 a share. Get your head out of your butt for a minute and remember that, seriously, because there's people out there that just think this is impossible. And I'm like, dude, stop looking at the chart like it's $109 a share and that's way too high valuation. Look instead at where is that in the grand scheme of things according to it's the original opening price of AMC. That's a full recovery to the original opening price in 2013. It's not like that profound. It's not some massive number, that seems impossible. It's not. So like the shifted value is quite different. It's now the bottom instead of the top. I would argue, and I've argued before, this is probably mathematical. This is probably a big part of the reason why that shift value was put into place, because it gives you a very even way of getting back to an average. If you had bought and sold and you're a long on this chart, this is going to be where most of your position is probably centered around long term. Maybe a little lower, maybe down here at like 50, but like look at this waveform pattern and tell me that doesn't seem legitimate. So like the thing is like when I did that measurement in 2024, what it told me is that this could be a very, very long wave. And this has not changed. This still looks like 2027 to come up there. That's why I was not suggesting, I mean, I did say it at one point, like it could be up here at this point in February. I'm not saying I always thought it was going to be like slow, But the idea of it being slow came from this very early marker. Now, reasonably speaking, you could look at this and say, well, I don't think it breaks out here, Booksy. So if it doesn't break out here, what happens? Well, it would just keep going, I guess, and it would just go to like 30 cents, right? It would just keep going down indefinitely, right? You could make the same argument, I suppose, from here to here and say, well, I don't think it's going to do that. I think it's going to just distribute again. And that's actually the inverted marker, and it makes sense. So the timing here is not, in my opinion, it's not that controversial unless you were just expecting it to be like a huge move. Like this to me makes perfect sense. And it, again, if it's going to go up, it's going to happen right here. The thing is that none of this demands that it has to leave, right? Like in theory, could this be like a macro M pattern that doesn't even break out of $10? Well, yeah. And I mean, there's people out there that say that. I've already said my reasons why, because I think that oftentimes this is indeed hit early on, and then it comes back down again. But the overall picture here is not exactly like great either way. I'm not saying it's going to go straight to the moon, nor am I saying it's going to go all at once or whatever. This can definitely have more downside. And this is what I've kind of attributed to a bigger retracement later that will have kind of a giant cup and handle type pattern here. This is typically what happens on an M cross. You get one that's kind of a pointed top, one that's more of a flat, rounded schematic, and then you'll get a like kind of a cup and handle, but you'd see the iterations here in the working out of it. So macro wise, do I think this is very possible? Yeah. And then this is a gigantic 50-50, back to the top right here. So as I look at this, I'm not in a particular mood when I say that it just takes a long time. And I think there's a very real reality that GME had the same thing. It looks like 2027 might end up being the better year on the bigger picture. What this does is it essentially resets it to the highs that we're currently trying to get above presently there. And I think it's, again, as realistic as it's going to get, in terms of like how this thing travels over time. And it probably would be lower longer. I don't know. I have it going up like immediately, but it'd probably be lower longer there. Sort of like this. Give me a few more minutes. I'll come check them out, okay? So the wave pattern here is very slow. So imagine for a moment that this is not an S-curve down, but it does indeed hold an M cross. Then you can kind of take into consideration this as like a middle point where we're at now. And you can see that that's a two-year cycle. It's actually quite long. So it becomes like a 4-year cycle. But this is the first half. So there's M1, we need M2. That's why I think it's 2 years. And I think you have the same thing here, but the M2 ends up going up. So then you get the breakout. And then it comes back down. I think we're going to do the same thing, but we're going to see it low. So M1, M2 is 1, 2, right? So M1 is kind of weak. M2 is a lot stronger, and then it comes back down. And this is where you really finalize a bottom at like 4, down to 3 maybe, and then you leave way later. And if somebody says that this is unrealistic or unreasonable, I would just say like, well, I just disagree. Like, really what we're talking about is it being range bound between $2 and $20 for 4 years. And a 4-year accumulation on a bottom, if that were to happen, is a huge amount of time, like a humongous amount of time. Huge amount of time. That's a long period to accumulate. So, and then looking at the widening as it breaks down with a shift, let's do that from the cycle point of, is that long enough? I mean, maybe. It puts you in the peak right here in the middle of the cat ears, which is strange. I mean, we can keep going on this forever and ever and ever. This is where oftentimes I find that it